Hey there, so in this video I want to talk about how we handle risk here at QuantFlo, and I want to go over the 3 different risk profiles that we adopt here depending on the account balance. Alright, let's jump right into it. So here at QuantFlo, for our trading systems, we can adopt from 3 different risk profiles. One is standard risk, one is low risk, and one is very low risk. So the standard risk profile has a historical maximum drawdown of up to 30% of your account balance. The low risk profile has a maximum historical drawdown of up to 15% of your account balance. And then the very low risk profile has up to a 7-8% of maximum historical drawdown of your account balance. Now obviously, depending on which of these risk profiles you choose, yes, the lower the drawdown, but also the lower your ROI and profits will be. So let's jump into the computer here so that I can show you in detail how each risk profile would perform depending on risk sizing. Let's go. Alright, so now that we are here in the computer, so let's go ahead and run the real numbers here. So this right here is assuming that the initial investment is $50,000. So we're going to base position sizing on that investment amount. So for example, risk profile number 1, like I said, it can reach a historical maximum drawdown of about 30%. And that's this example right here. So let's go ahead and verify that. So as you can see here, max equity drawdown, it's $14,848. So let's put that here, 14,848 divided by the initial starting investment amount, which is 50,000. As you can see, it gives us almost a 30% maximum historical drawdown, so 0.29696. So this right here would be the standard risk profile, maximum 30% historical drawdown. But as you can see, the return is also super high. So yes, you will be risking more, 30% drawdown, but the profits, in my opinion, outweighs the risk. Now, like I said, this is just only one of the risk profiles, and this is the most riskiest one. So we're going to jump into the other ones now, which are lower risk. But let's just run the numbers here so that we can actually compare the risk to a reward. So now let's divide 360,312 divided by that same 50,000. So that is a 720% ROI profit with a maximum drawdown of 30%. So you are not only 10xing your money, you are, I believe, more than 20xing your money over a period of these 6 years. So yes, it is a long time, but it is still very good. If you divide that 720% by those 6 years, that still gives you a 120% average yearly ROI with that 30% maximum drawdown at any given point. So you're risking 30% drawdown for a 120% yearly ROI. Okay, so now that we have that number, now we know what the standard risk profile looks like. Now let's go ahead and show you the low risk profile, which, like I said, would be a 15% maximum drawdown. So all we would do is we would set up the position sizing to be a proper size so that we would only risk. All we would do is we would choose the right position sizing so that we can lower the risk per trade. Now, by lowering the risk per trade, you're also going to be lowering the amount of profit you can make per trade because you're using smaller position sizes. But if you do want lower risk, then this is what I suggest. And this is something very smart to do if you have higher investment amount. If you're going to start off with like a 10 or 20,000 investment amount, then, doing the standard risk is fine because it's 30% of that 10 or 20,000, which is not much. But if you're going to be running this trading strategy, this automated system on a $100,000 account and above, then I would most likely go with either a low risk profile or a very low risk profile. So the higher up in investment you go, the lower the risk you want to take, even though you're going to be making less ROI, but it'll still be a good ROI because it's a higher amount of initial investment amount. So it makes up for it. So this right here is with the low risk profile. So only $7,000 in drawdown. So let's do the numbers once again. So 7,424 divided by that 50,000. So yep, there you go. It's almost a 15%, as you can see, 0.14. So 14.8. So almost 15% drawdown with this setting. So 180,156 divided by 50,000. So you would have made a 360% ROI. So let's divide that by 6 years. So you would average about 60% ROI yearly. So that's what you'd be looking to make on average yearly, 60% ROI, and risking 15% maximum historical drawdown. Okay, so there you go. That is the low risk profile adopt here at QuantFlo. And now let's go for the very low risk profile. So very low risk, like I said, would be about 7-8% maximum drawdown. So on this trading strategy, it should equal around a 30% yearly ROI, risking 7 to 8% drawdown at any given point. So this is for the past 6 years, starting with a $50,000 account. You would have made $90,000, and your account would have only ever gone down a maximum of $3,712. So very low risk. I personally would only use this setting if I was investing over like $500,000 or more into this. But yeah, everyone has different risk profiles. I currently use standard risk on my own accounts. For the moment, once the balances get higher, I am going to lower it. I'm going to drop the risk to the low risk so that I only risk maximum 15% maximum historical drawdown. But currently, I do use just the standard risk because I'm trying to increase the accounts as fast as possible. So, like I said, that just all depends on the on your risk profile and the amount that you are looking to deploy to a trading system. So, yep, there you go. Those are the 3 risk profiles that we use here at QuantFlo Trading. And another thing that I do want to mention that's very important about position sizing is a dynamic sizing strategy that we use here at QuantFlo, which scales position sizes higher and lower depending on the market regime that we're in, so that we can try to capitalize on when the market regime is favoring us, and also so that we can protect capital when the market regime is not. So also, something very useful that we have developed here and we learned this from experience, which is drastically improving our results. And if you want to see exactly how my automated trading system works, I created a free report called the QuantFlo Trading Blueprint, and I'm going to have it linked down below in the description if you want to check that out. And it explains the exact framework that I use to build and manage these systems. Alright everyone, so comment down below and let me know what risk profile you'd be comfortable with, or any other feedback that you'd like to give us. And that's all for this video. I'll catch you in the next one. As always, peace.